Okay, so just to journal this trade I took today, I made 90 bucks by taking one contract off. We'll go over that very quickly. It was a 5 contract total trade, obviously risking 1% of my account. I do that every time, 1% risk. Multiple factors went into this, okay? Number one, on the weekly, we're bearish. The way we closed that weekly candle last week, actually closing below the wick here, disrespecting order flow, and closing below that low, we're bearish. Now, go to the daily. I kind of touched on this, or I did touch on it in my stream earlier before market open. I have 2 draws on liquidity, but because I'm bearish on the weekly and because order flow is also bearish on the daily, I was more inclined to want to take out the previous daily low here. That was the draw I wanted to see. However, I said I'm cautious about the fact that we have this bearish fair value gap here. That's also in line with some, daily fair value gaps that could act as inverse fair value gaps, right? This is a draw as well. So I wanted to be cautious when I entered for a sell that we could potentially be drawing to this, even though, again, I have to trust my bias. Weekly I'm bearish, daily I'm bearish. So I'll go for the draw on liquidity that's bearish, essentially. Now, go to the 4 hour. This is the high I wanted to see get taken, right? It was that Friday wick where we ended up creating an equal high instead of taking this high out, which would have allowed me to take a sell on Friday. Didn't, because equal highs. But we took the equal highs. That was my draw on liquidity that I wanted to see before we went lower. Now if I go to the 1 hour, right, you can see those highs a little bit clearer. You can see how this is equal highs, relative equal highs here. You can see the way this candle also formed here. We ended up respecting a 1 hour fair value gap. Okay. Now, as far as a target, I actually went to regular trading hours here. I drew this from the 1 minute, so that's why you're maybe wondering why is this drawn like this? Well, this is the new week opening gap. Okay, but I drew it from the 1 minute, and I was targeting the midpoint of the new week opening gap. You'll see it here. Midpoint of the new week opening gap is what I was targeting. So we swept, like you saw, we swept on the 1 hour nicely, traded up into a 1 hour fair value gap. Let me go back to electronic trading hours, right? And then on lower time frames, let's go to the 1 minute, right? We got a nice distribution. We broke past the fair value gap. We broke past, or we disrespected order flow, and we broke past the low here. What I did was I used this inverse fair value gap to enter, so I got in here off a limit, set my, well, here, I have it hidden here, hang on. Right, so I got in here once we wicked back into this fair value gap, or this inverse fair value gap. We also did respect this fair value gap here, so this would have worked as well. Okay. Anyways, I got in off the inverse fair value gap after we broke structure, and then I targeted, this was my first take profit. I just took 1 contract off. Again, I had 5 contracts in play. I took 1 contract off here. That was my plus $90. And then I was planning on taking another contract off here. This would have been the 930 low that we created before going higher. See it better on the 5 minute. Right, that sweep created the 930 low. Targeting that, and then final target would have been here. I was planning on I took 1 contract off here. I was planning on taking 2 off here and putting my stop to break even and letting the rest play out, the final 2 contracts play out. The reason I exited early, or the reason I put my stop loss to break even, was because we ended up, if I go to the 15-minute, you'll see these candlesticks. They're disgusting. These giant wicks are hard. They're horrid. They're horrid. They're horrid. They're horrid. HORRID. If I am looking for a nice, if I'm looking for a trade, I'm looking for it to distribute like it did here. It did right away. Right? But then we start to get this consolidation, these giant wicks, and it's near my entry. So I said, fuck you. If you don't want to continue lower. And there wasn't much else to come for. There was this tiny fair value gap here that we could have traded into before. You know, that would have been the final draw on liquidity that would have made sense before we went lower. Wasn't respected. This was really the make or break fair value gap here. And you saw we got a nice candle here, nice candle here, but we didn't want that continuation. And on the 1 minute, it's very, you know, for lack of a better term, it's annoying the way we kind of continued higher here, because we just left like these, just, I mean, these lows are so clean. Like, I don't see how we lead them today. There's no way. But so that was the trade. So I set my stop loss to break even once we were, you know, headed higher here. And, you know, realistically there was only one more place that we could draw to and go lower without stopping me out, and that was here. We also on the 15-minute, very clearly some disgusting price action with these wicks. Yeah. So that was the trade. As far as my psychology went, it was fine. You know, I was definitely, I looked at every candle form. I'll tell you, I did. It's hard for me to not be looking at the chart and be away from it. To be honest, it's helped me that I've been looking at it the past 2 trades, because I've been able to break even watching, you know, it kind of consolidate in my entries. So it's been good. You know, I'm disciplined enough where I'm not going to be watching it and putting this higher. I'm not going to be watching it and you know, breaking even just for the sake of it, right? Like, I broke even because, like, for a good reason, like, not for, so, you know. And all those a solid day. You know, any day you make any profit is a good fucking day, so we'll take the $90.